This is Mark Anthony with Mercury Time Price Analytics, and welcome to our end-of-day algorithmic trading update for Wednesday, September 9th. So we had a lot to talk about tonight. And if you're a trader, you have to love this tape, especially if you're an algorithmic trader, because it allows you to precisely trade both sides of the tape, long and short. And if you don't like trading long and short, look, with algorithms, you can trade whatever side of the tape you like. Now, what you see on the screen right now is the live chart that our members see. We spent months just working on the interface. Over a year building these algorithms. They are the same mathematical metrics that the institutions use. Now, how can I make that claim on every video? Well, we put out to our members last night, and I'll show you the precise time we put it out. In early Globex, we had a long cycle algorithm, very long cycle, that had a key level at 32.95.52. Now I understand that the S&P E-mini doesn't trade at 52 cents. The low was 32.95.50. Our algo had that level before Globex opened and nailed the low within 2 cents. So you think that was a pretty good trade, right? As a matter of fact, a little quick housekeeping before we get started. If you'd like to get a hold of me, email is markanthony@mercurysignals.com. Twitter @MC2085, and then our website, mercurysignals.com. And by the way, if you have not been to our website, right now we're running for limited time with limited space available, the lowest price that we've ever offered. If you're, it really doesn't matter what type of trader you are in terms of time, whether you're short-term, long-term, intermediate term, we accommodate all those trading styles. And there is no system of algorithms available commercially for individual traders that is as accurate as this. Since December of last year, December of 2019, we have an open invitation. Any algorithm, commercial or institutional, will take you on in a blind, controlled environment. We'll put our algorithms against yours for precision and return, daily basis, weekly basis, whatever basis you want. Nobody's going to take us up on it. Nobody. Because literally, we'll take on hedge funds and we'll beat them. And that's a fact. And they spend millions of dollars for the algorithms that we give to traders for literally a pittance. Now, we're running a special right now. If you go to our website, at the checkout, put in promo code WEB30, or coupon code as it says on the checkout page. You can get a 3-week trial. It runs $54 per week for a 3-week trial. You're talking about one S&P handle, one E-mini handle. An E-mini handle is $50. It may be the best trading decision that you ever make. But you see these videos and you see what these systems do, you owe it to yourself to check it out, because with the way these markets are moving around, I do not know how anybody can try and trade this tape without using this type of algorithmic advantage. So just a couple things on this chart, and then we'll go to some of the pre-prepared screens that we've got for you. Day trade algo, swing trade algo, short-term algo for those of you that like to trade frequently throughout the day. Swing trade algo got long. It takes longer for the swing trade algo to trigger. It got long right about 33.43. You had about an 80 handle move. Our day trade algo, scroll this chart back, got long here about 33.32. You had this move up. It got you out in order to protect your profit and not have you sit through this drawdown. And then it got long again right in here about 33.38. And then you get this move. Now it finished the day long, both the swing trade and the day trade, and it is looking like it's about to trigger short right here. It's not fully cooked yet, but it's getting real close. So let's take a look at some of the pre-prepared screenshots. We're going to start with the end of last week. Now, we give you a combination of horizontal fixed algorithmic pivots and oscillators that move in and out through the chart like you just saw. Now, the reason we give you the fixed algo pivots in addition to the automated algos is because once you're in a trade, you need to know precise levels at which to take profit. So here you have Friday. This is our long cycle morning pivot that we published before the market opened on Friday. Literally top ticked it. This is our daily bull bear pivot on Friday, September 4th, 34.66.95. Look at how beautifully it trades from level to level. Now, in this case, it broke right through these levels. This is the kind of technical damage that was done on Friday. You blow through the swing trend pivot. You blow through one regression line, two regression lines, three regression lines. There are very few days that we've seen price just blow through three regression lines. So this chart damage, I know you had a very bullish day today, but this tape is in a very, very dangerous setup. So you just don't know what tomorrow is going to bring, but we've got the algorithmic metrics. So if it wants to go up, we'll trade it long. If it wants to go down, we'll trade it short. Now, the algo extensions on here, these were put out for our members before the market opened. So you had this massive move down from, what was it, 34.80 and change, down here to around 30, a little below 35.50. This was put out before the day session started to the tick. This is where it stopped, and then you got this move back up. Let's take a look at another screenshot. This is a long cycle chart. Each one of these bars is over 7 hours. You can see the type of chart damage you did here. You go through the this key day trade and short cycle swing trade algo. You blow through that. You come down here, support level, you get a little bit of bounce, and then you get this type of action. So again, this is what we're talking about, where we give our members a combination of the fixed algorithmic pivots as well as the oscillators that show these key algorithmic levels, just like the level you saw last night at 32.95.52. Look, here's the thing. If you and I and every individual trader in the country got together and pooled our money, we could not make the market stop to the tick on a dime the way you see on this chart. And the only reason it does this is because these are the same metrics that the institutions are using, period. I mean, you see this chart after chart, night after night. Here's another example. And this shows you September 1st, 2nd, 3rd, and 4th. And you can see what happens when these Mercury band algos break. Now, we give our members the daily bull bear pivot before the market opens. These Mercury bands, and this is the NQ chart. These Mercury bands were put out before last week even started. These are the Mercury bands that were put out the Sunday prior to last week, which was what, the 30th, 29th, was it 28th, 29th? These were published before the Globex Open. Here it is. Before the Globex Open. Nailed the high, nailed the low, literally. Now think about this for a minute. And think about this in the context of $54 a week to try our service for 3 weeks. You had, what is that, about a 1,300 handle move down, 1245, 11, about 1,300 handles in NQ that stopped to the tick at a level that we put out before the week started. And what these Mercury bands are, think of it in terms of a daily bull bear pivot, but it's for the whole week, because these are really long cycles, much longer cycles than what we use to calculate our daily bull bear pivot. So imagine you're trading NQ, it comes up into here, can't hold it. You come down here, you get a bounce. You come back, it can't make it back up, and you can see where this breaks down. So you don't have to sit there and look at 18 different charts a day. We put this right on the screen for our members. When I calculate the Mercury bands, we take those levels and we publish the data points so our customers can see exactly where the levels are, but then we overlay them on the chart. So when you're looking at our live chart, you see all these levels, they're right there. So you can see as price moves in and out. Now, just here tonight, this is a level that was put out before the Globex Open, 34.11.58. Is that precise enough? Again, you and I and every individual trader in the country, if we pulled all our money, we could not get the S&P futures to stop to the tick like that. The only ones that can are the institutional algos that are using these same metrics, but they're trading with hundreds of millions, sometimes billions of dollars. And what our systems do is they show you the levels that are important to them. And so you're not coming into the market guessing. If you know the levels that are important to the institutional algorithms, then you can take action long or short when they do. All you're doing is one of my mentors taught me, you're following the elephants. That's all you do. It's real simple. So let's go back to these charts, or this video is going to be a whole lot longer than we intended. But if you go on our Twitter feed, you'll see this same chart. These levels are very precise, and what you have to take notice of is when price just crashes through them. The number of Mercury bands that were broken last week in NQ, I don't know that I've ever seen that in a 2-3 day period. This is unprecedented. And I know you had a huge bounce in NQ today. I'm telling you that the technical damage that was done Wednesday, Thursday, Friday of last week and on Tuesday of this week, you had a very low volume move higher today. And I don't even put volume on our charts. Our algorithm tells us where the key volume, high volume levels are. But you had a low volume bounce that they poured some fuel on the fire. There was some liquidity put in the system to take advantage of that short squeeze. And before you know it, NQ was up, 400 handles, something goofy like that. They took it away here. They gave you a little move up today. Tomorrow, I don't know what we get on Thursday, September 10th. This tape could go significantly higher. It could go significantly lower. Personally, I don't care. Because if they want to take it higher, we'll trade it long. If they want to take it lower, we'll trade it short. As simple as that. We'll follow what they do. That's all you have to do. So let's move on. All right, now, we just showed you the fixed algorithmic levels. Because on our live chart, you're seeing both. You have these fixed horizontal algorithmic pivots. You've got these regression lines. And if you're a student of WD GAN, you'll get completely geeked by these regression lines. What the regression lines do, they are a graphical representation of the fact that time is both circular and linear. I don't want to get off into that because that's a whole video in and of itself. But if you're a student of WD GAN, you know exactly what I'm talking about. So you get the fixed horizontal levels, and then you also have the oscillators. So these orange ones are trend algos, and you've got day trading trend, swing trading trend, intermediate trading trend. All of these are rolling over. And you can see what happens when you combine these sloped algorithmic time cycle algos with the fixed points. Now you got double confirmation. So here we are in S&P. This is from Tuesday the 8th. So you get a move up into this Mercury band, which was published for our members before the Globex session. Actually, forgive me, these were published Sunday, because when you've got a short trading day like we did on Labor Day, we don't have a full day's data, so we can't recalculate the Mercury bands. So these levels were actually published prior to the Globex Open Sunday. You come up into this Mercury band. It fails. It also breaks one of the key trend algos. And then it's just level to level. You come down into these algo oscillators. You break those. You come down, you test it. You try to bounce exactly up to a Mercury band. See this? You come down into the oscillator, come up to the fixed horizontal point. That's why we put these fixed points on the chart, because when you see these fixed horizontal levels that are important to the institutions, along with the time cycle algorithms that give you these wavy lines, you get this move down to the tick. You get a move back up to this Mercury band at 34, 35, 75. And then you get this action. It breaks the oscillators. It breaks this oscillator. I know this looks like a flat line. This orange line is just a really, really long cycle trend oscillator. You come down right to this spot, no bounce. That was the daily bull bear pivot. And then it starts getting ugly. You try to hold this Mercury band at 34.05, can't hold it. You try to hold this Mercury band at 33.87.54. Bounce, can't hold it. And so look, you know, when the oscillators are trending down, okay, you're shorting at the failed retracements. So you come back up here and you break it. And imagine if you put a short on right here at a little below 33.87 after you had this failed bounce up above 3,400. Well, let's say you were short 33.85. That's a pretty nice move in one day. Now it came down into 33.49 and it tried very hard to hold it. It didn't. And then ultimately we saw that level last night down into 32.95.52. And this is a little bit closer look at the same thing. Again, you break the white algos on here. The white oscillators are the fastest. Then the orange ones are your trend algorithms. And you know, you're breaking, and what we do is we take these oscillators and we put them on multiple different time cycles. That is the same thing the institutional algos do, is they look at these algorithmic oscillators on multiple different algorithmic time cycles. Now, one of the reasons that I really encourage you to try out our service is if you're trading on 5-minute bars or 10-minute bars or 15-minute bars or 20 minutes or 30 minutes or 1 hour or 2 hours or 4 hours, listen to me here, folks, not one single of those time frames are what the institutions look at. None of them. When you're looking at our live chart during the day, you're looking at the algorithmic time frames that the institutions use, but they're not using 5, 10, 15-minute bars. I'll let you in on a little secret. The key algorithm that institutions use is, put it this way, almost 7 hours long per bar. They're not trading off 5-minute charts. They could care less. They're looking for these big levels, and that's where they're going to put their resources to work, and we provide the same stuff for you. Look what happens here when you broke this regression line. Splat. You try to hold this regression line, this tan one. You can't. You get a little move back up, stops at the oscillator, regression line breaks, splat. You try to hold this regression line, get a little bounce. Where does it stop? This cyan colored oscillator right here. Where does it stop? Right there. And you come down and make another regression line. So it's as precise as you're going to find. Now, last night, how did we know that that level at 32.95.52 was tradable? Now, I can't show you the whole chart, which we publish for our members, but this is a snippet of the chart. And you see this orange algo? And this is over 8 hours per bar, folks. Each one of these bars is over 8 hours. 32.95.57 when I took the screenshot. At the time it came down here and stopped at 32.95.50, that reading was 32.95.52. 2 pennies. Now again, if you and me and every individual S&P trader in the country pooled our money, we could not do this. The only entity that can do this are the institutions that have these levels ahead of time, just like we did. The only difference is they've got millions of dollars to put at work. Well, it doesn't matter that you and I don't have millions of dollars to put to work. You have whatever size account that you want to trade. How much more effectively would you be able to trade that account if you knew this level was here before it got there? Now, you don't catch a falling knife. You wait for it to stop. But by the time this had bounced from 32.95.50 back up to 33.05, we were letting our members know. So this is the chart they saw. And there you go. Slack channel for our members, 6:21 p.m., long cycle oscillator at 32.95.52. We put that chart out. Our members got long very shortly after that. We've got members that got long at 33.03, 33.05. I was long at 33.07 because I wanted to make sure I put this level out and let our members know before I took the trade myself. And by the way, this is our daily bull bear pivot for today, 33.52. The daily bull bear pivot we put out, for our members, we put it out around about 80 to 90 minutes before the market opens. So our members had this at 7:50, this is Eastern time, 7:56 a.m., over 90 minutes prior to when the market opened. You think this would have been a good level to know in NASDAQ today, 11,194, or 33.52.78 is the bull bear pivot? You better believe it. Again, go to our website, mercurysignals.com. Use the promo code WEB30. It'll get you a 3-week trial for $54 a week. Now, if you're watching this video later, please understand that this is a limited time offer. We have limited space. So if there is no more space available, I apologize, but we only have a limited amount of seats available when we run these specials. And by the way, there's no software to buy, there's no contracts, there's nothing to download. You can cancel at any time. So you literally have nothing to lose. If you want to know where the institutional algorithms, the levels that they target, $54 a week. If you're trading ES, or even if you're trading, whether you're trading the E-mini or trading the micro mini, one handle a week. I mean, really, would it be worth one handle a week to know that that level was there at 32.95.52 last night? I mean, that one trade pays for you this service for heaven knows how long, depends upon what size account you're trading. So I want to show you 2 charts from today. I want to show you the fixed algorithmic pivots, and then I want to show you the oscillators. So this is end-of-day screenshot. Every level on this chart was there ahead of time. The Mercury bands, those were published prior to the open last night. Again, this video is being recorded on Wednesday, September 9th. Every one of these horizontal lines was published for our members before the Globex open last night on September 8th. The daily bull bear pivot was published prior to the open today. It's right here. 33.52.78. I just showed you where that was. That was published this morning at 7:56. I mean, look at that. Because here's the cool thing about our algos. Some people like trading Globex, some folks don't. If you don't, and look, there's a lot of risk in Globex because the volume is light. The first couple hours, they can move the tape anywhere they want to. Don't chase the tape around in Globex. We give you these levels that are going to apply all throughout Globex and the whole day session. So when we publish these Mercury bands, prior to 6 p.m. Eastern Time Globex open in the evening, they apply all throughout Globex, all throughout the day session. So don't chase the tape around in Globex and dig yourself a hole and then come into the next day session and start revenge trading the tape, trying to get back to even. That's how you have a really, really, really bad day. So if you like to trade Globex, look, our live chart runs every minute the market is open. We turn it on every night at the 6 o'clock open. It runs till the 5 o'clock close the next day, so 23 hours. But the levels are there. You don't have to chase the tape around in Globex. And these regression lines, and this is actually a typo. These have been on the chart since July, not June. These algo regression lines here. This is the Mac Daddy right here. This one goes back to this particular line. Now they go back to June, but you pull this chart back and this line goes right through the congestion zone that we saw in the last 3-4 days of July. So if you keep an eye on this level now, when I did this screenshot at today's close, that level was just over 34.20. And actually, this is the ES chart. The key regression line is right now, call it like 34, about 34.03 as this video is being recorded, 34.03, 34.04. They're going to protect that level in Globex until they decide they want to let it break, and then it'll do so. But you don't have to guess. You wait for price to trade above or below the key algo levels. This was your low last night. You got another Mercury band at 33.11, so that's a good marker. Once you get price acceptance above that, you're off. We recommend that you take partial profits all throughout the trade, adjust your stop so you're not taking this drawdown, and then at that point, you come back and get price acceptance above this Mercury band at 33.49, above the bull bear pivot from this morning at 33.52. You come up into this Mercury band at 33.87.54, come above, back down, you test it, and you're back off. And you just trade level to level to level. Now let's take a look at what this looked like end of day on the oscillators. Now this gives you a look back to the end of last week too. This is what's problematic about this. The orange lines here, these are three of the primary algos that we use, and we've got multiple different time cycles. This time cycle is a little less than 30 minutes. Again, 30 minutes is not an algorithmic time cycle. And on this particular chart, cycle 1 is the fastest algo, which means it's the shortest time cycle. So you come down here last Thursday and you break this level, which was call it 35, 25-ish, 23, 35, 23. You break that, you come down here into this regression line. You try to bounce up, you fail at cycle 2, the intermediate cycle. You come down to this regression line. You come back up and fail at that same oscillator. And it failed twice, here and here. And from that point, that was about 34.80. Yeah, I mean, you got this nasty move down. Then you come back up into this same regression line that it failed here and here, and it pokes its little head above that regression line. This is what these regression lines do. This is where the algorithms are setting traps. So you have this little push above. People think, okay, this is the big move back up, because why not? I mean, we got a low here, we got a higher low here, a higher low here, a higher low here. This is the one I'm getting long, baby. They set the trap, you get long, and splat. So, and look, it's not just a matter of making money by having these levels. Think of all the losses that you could prevent if you knew what these levels were all day long. And for our members, they do. They're right here on the chart. So I really encourage you, if you're trading these markets at all, and let me be flat out honest with you, if you're not using an algorithm that gives you the levels the institutions are trading with, I simply recommend you don't trade. If you don't have this type of advantage where you know the levels that the institutions are taking action at, where you know the levels that are key support and resistance for the institutions, if you're just winging it, I would recommend you just keep your money in cash or put it in a safe investment, but don't blow your money trading these markets if you don't know and you don't see what the institutions are doing. So we ran a little bit over time. We had a lot to talk about today. Again, if you haven't been to our website, oh, by the way, I want to show you one more thing. Even if you don't decide to take us up on that offer, a couple things I would recommend. Go to our website and click on market reports and read this report that I published over the weekend. It's called One Thing Leads to Another. Just either click on the graphic or click the little link down here. And this report, chart after chart after chart after chart, and I want to mention something right here. I'm willing to bet there is no other trading website anywhere in the country that provides this much information up front. Because you know what happens. You go to these websites, they want to sell you membership. You have no idea what it does, how it works. And the only purpose of their website is they want to give you enough information to make an impulse decision and then you find out it's not what you thought. And also, I would recommend taking a look at our chart of the day. And if you want visual proof, day after day after day after day, that these are the exact institutional algorithms that massive hedge funds and massive institutions and even sovereign entities are using to trade the market. Scroll down through this if you have any doubts. All right, so we want to wrap up for the evening. One more time, if you want to get a hold of me, Mark Anthony at mercurysignals.com, website mercurysignals.com. Please follow our Twitter feed at MC2085. And one last shot, if you go to our website, click the subscription tab at the top of the page, enter Web30 as the promo code when you check out. You'll get a 3-week trial for $54 a week. And that is the best deal on any trading system anywhere. And the only reason I can make that claim is because we prove it every single day. Listen, we ran a little bit over 31 minutes. I want to thank you so much for taking your time. We appreciate every one of these videos you watch. And most of all, times are tough all throughout the country. A lot of folks are depressed. Look, God will never leave you or forsake you, ever. If you're like me, a lot of times, I go about my business and I get busy and I forget that He's there. He'll never leave you. He will never forsake you. If you have never had a relationship with our Lord, I cannot think of any better time than right now. So we thank you so much for your time. As always, and most importantly, God bless you. God bless your family. We hope to see you again real soon.